Welcome to another edition of Focus on Alternatives, the joint venture project between Real Assets Advisor and Adisa. Today we have Corey Maple with us. Thank you for joining us. He's the CEO of Legendary Capital and the sponsor of various lodging REITs. And today we're going to be talking lodging. So can you go ahead and give us an overview of lodging as a sub-asset class of real estate?
There are many different types of real estate asset classes. Obviously, the ones that most closely replicate the economy is lodging. That's both, there's really good things about that, and there's not so good things. And I think that's one of the things that we want to talk about today.
So there's lots of different subclasses of lodging. Can you walk us through those?
Well, you go everything from the economy hotels, the Super 8s of the world, all the way up to super luxury hotels that you'll find in downtown Paris and downtown Manhattan. And the vast majority of people stay in what are called upper mid-scale and upscale hotels.
For example, what are some of those brands?
Well, so you have, as I said earlier, everything from economy to luxury hotels. And hotels like a Courtyard by Marriott caters to both the business traveler and the leisure traveler. And so you'll have group business there, you'll have L&Rs, locally negotiated rates, with large companies that take up thousands of rooms a night, or thousands of rooms a year. And it's that combination is what makes that a good, viable business.
Okay, can you now walk us through kind of the fundamentals of the industry and how it works, and what are the key metrics when it comes to lodging?
Well, most people just think about occupancy. That's the question everybody always asks. What is your occupancy in your hotel? And occupancy is only one of three critical elements. So you have occupancy, which is the number of rooms sold. You have ADR, average daily rate, the rate that that the average guest pays for that night in a hotel. And then occupancy times average daily rate is RevPAR, revenue per available room. And so the real number to look at least on a top line revenue basis, is the question should be, what's your RevPAR, not what's your occupancy.
That makes a lot of sense, kind of like net operating income on the REIT level. So
correct.
Perfect. So I want to step back. Why lodging as an investment versus office or multifamily or self-storage or retail?
Well, they're all good. And I think any investor should have slices of each of those sectors. But the thing that you get out of lodging is you get to change your leases every single day. It's not that you're sitting on a 10-year lease in an office complex or a 1-year lease in a multifamily. So that's why lodging tracks the economy directly, or as directly as you can. It's always an early indicator as well of what's happening in the real estate sector. So as you see inflation rise, if you're in an inflationary environment, you can change your rates every day, and you're not going to be underwater compared to the rest of the sector. And you don't have to wait 10 years or 15 years to reset your lease.
So can you expound on that a little bit more? Talk to me about how lodging as a sub-asset class of real estate responds to various market cycles.
Well, it definitely follows the economic cycle. That as times are good, you're going to be raising rates. Your occupancy right now is at all-time highs. And so where most of the growth is coming from is in average daily rates. So if you are going to a hotel today, in all probability, your rate's going to be 2, 3, 4, 5% higher next year in the exact same hotel. And that drives revenue, which, if you can manage your expenses properly, drives NOI. So you'll find that hotels really just track right along with the economy.
So we just talked about different cycles, and you also talked about the different classes of hotels. Do they respond differently? Does high-end hotels respond differently in these economic cycles versus a lower tier hotel?
Well, we think that if you are in that mid-tier class, you're fairly well insulated, better than luxury or economy, because it's easier to go down a tier and still travel and do the job that you need to do to a certain point than go down to that lowest tier. And so what we've seen in the past is this consolidation and stability in that mid-tier market.
So we're financial advisors here. We're evaluating different hotel or lodging investments. What are some of the fundamentals when we're analyzing a portfolio of properties that we should be looking at? Or what should you be looking at as a money manager?
Well, what we look for is location first and foremost. And you have to really look at not just the overall market, but the submarket in which that property is in. Is it visible? Does it have a good flag? Are there amenities there that are going to attract the type of guests that you want to have? You have to, obviously this is an NOI business. So your net operating income is going to drive value. Is there some upside in that NOI? Or is it a good, stable, are you buying cash flow where you can look backwards 4 or 5 years and you know historically what that property has done, and then look forward another 4 or 5 years and can predict with a high degree of certainty where it's going to be. So those are some of the key aspects to look at. Obviously the condition of the property is critically important. And being able to do the proper due diligence on that property to know that you're not buying someone else's problems, be it a foundation problem or a roof problem. So there's everything from infrastructure to operations in the hotel business.
Well, and you're right, and you just keyed on something that I want to go to next, and that's operations. So yes, you have the bricks and sticks of the hotel, but this is more of an operating business. This is not some triple net lease for 20 years to some tenant. So how do you evaluate, as a money manager, the operating side of the business?
Well, that's both the good and the bad. Because if you have the operational component, you essentially own the tenant. And if you own the tenant, you can control what happens there. If you have a tenant that, even in the best of times, if you have a great long-term lease, that company can go out of business. And when that happens, you're left, if you can't collect on the credit, you're left with an empty building. With the diversity that you have in a hotel, you're renting those rooms every night. Now it comes down to how good is the operator, the manager that's there every day, in performing against expectations, performing against the business plan, and making sure that you can drive value all the time. Watching expenses, watching the top line leads to a good bottom line.
So in wrapping things up, what is the main reason why investors should focus or allocate some of their money to lodging or hotel investments?
Well, first and foremost, if you look at lodging versus other asset classes, the last 10 years cap rates have been steady. There hasn't been a significant amount of cap rate compression, so you're getting the same value that you would have received 10, 12 years ago. In other asset classes, even though they're still very good and there's good returns to be made, cap rates are lower. So when you have that delta on that cap rate and you are buying essentially at a fair historical value. And again, to reiterate, it's going to track the economy by and large. So there might be a little bit more risk, but when you're buying at an 8.5 cap, for example, you get a commensurate return with that risk. If you have a good operator in there that understands how to run during a leaner economy, how to sell, how to build up the what are called LNRs, the locally negotiated rate clients, so you have stability over time. That can really mitigate those economic cycles.
That's very helpful. I'm glad you went and addressed that point. So I appreciate you for walking us through lodging investing. Thank you for watching. For more information about alternative investments and lodging investments, please visit realassets.advisor.com or adisa.org. Thank you.
Happy day.